Hello everyone, and welcome to one another weekly sectoral analysis video. The last couple of days in this week were pretty surprising. Why, I'll tell you. The reason for that is the trend and momentum in the daily time frame chart are down, and even in the weekly time frame chart as well. Even the RSI was weak. But on this day, on this particular day, when we had a high wave candle over here, which is on 21st of Jan, we did bounce back from this particular Fibonacci extension, which is 25,076. यहाँ पे भी एक support था in the weekly time frame charts, and then we had one more high wave candle. Generally, what happens is when we have a high wave candle at a support, and if RSI is also oversold, a pullback, just a short-term pullback, the pullback may not sustain. If we had pullback, probably we would have bounced back till 25,570 or maybe a little bit more, but we may not have sustained or maybe probably bottomed out. But at least some relief rally would be visible. Now, what happened the next day on 22nd of Jan, that we did open gap up. We did stay a little bit above it for some time, and then we closed in the red. So next day's trigger was possibly this high. Even this was not taken off, and today we have a sell-off. Now, overall, the market, the sentiment stays weak, but just the funny part is now, after breaking this weekly 61.80% Fibonacci retracement, the support is broken. Now, if I convert this chart into a line chart, we can clearly see that we have a lower low in price and we have a higher low in RSI. So this is not a positive divergence. This is just a sign that the momentum will continue on the downside, but the speed with which the market is falling might slow down until and unless we do not make a new low in RSI. All right. Bank Nifty. Bank Nifty, I think the trend is still up. We do have a very, very big candle in the weekly time frame chart, but the trend is up. Momentum is down. RSI is also weaker. And in the daily time frame chart, the trend and momentum both is down. We also have a very, very big red candle in the daily time frame chart. This is a support, 58,274, and this has been able to provide support to Bank Nifty in the last couple of trading sessions. If this is taken off, if this support is taken off, then the next support could be somewhere at 57,690, 686. All right. But since the trend is up in the weekly time frame chart, and if someone is trying to buy a pullback trade in the Bank Nifty, frankly, I would not be interested, because the reason is it could be a lot choppier in its nature. All right. And in comparison to the Bank Nifty chart, PSU Banks are much better. The trend is up in the weekly time frame chart, and if you compare the RSI over here, RSI is also fine. We do have a red candle over here and even in the daily time frame chart, but it is okay. It's fine. We are more or less actually consolidating. If markets were not so bad, if Nifty, Bank Nifty, the sentiment of the market was probably not that bad, we could have, I'm using the word could have, seen consistent trend and momentum on the upside in the PSU banking space, because considering the sell-off we have seen in many sectors, despite that, PSU banking space has fallen just a tad bit from its recent highs, is a really good outperformance. So overall, the structure and the overall sentiment in the PSU banking space remains positive, but you need to be a bit careful since the market sentiment and the momentum is down. Private banking space, I think it is deteriorating. The trend is now down, the momentum is down, and so is in the weekly and in the daily time frame charts. So if this recent low is taken off on the downside, the next support will come up at 27,720. Oil and gas space. Oil and gas space continues to deteriorate much badly. And the main reason why I'm saying much badly is this. You can see this candle. It's a very big red candle, even the second one. So the speed with which it is falling, you can see slowly and steadily it did build up with momentum, but the way it is falling is extremely fast. So I think the trend and momentum both in the daily and in the weekly remains down, and this is a recent support which is at 11,200. If this is taken off, then the next support could be in the range of 11,120 thereabouts. All right. Autopack. Now Autopack, I can say that it has three big red candles. So the trend is down in the weekly time frame chart. The momentum is also deteriorating and the daily time frame chart is also weak. We do have a higher high in RSI and a lower high in price. I would just like to convert this. You can see over here. So this is a sign that the downside momentum in the auto pack is slowing down. But will we get a pullback from here or not? That only we will come to know in the next few days. All right. But is it a time to buy or something? My answer is no, because if I'm going to initiate any pullback trade from the daily time frame chart, I would take the main sign from the weekly time frame chart, which is not that great. So I would avoid. One small thing I would like to share before I go ahead with consumer durables, why I like trading with momentum. The reason for that is this chart. See, this is, I've repeatedly saying, this is trend plus momentum. The choppiness is much lesser. And this is trend but no momentum. You will get smaller uptrends, lesser risk rewards, higher whipsaws, and all those stuff will happen. But when trend is going up along with momentum, things are much clearer and better. Okay. Now, consumer durables, the way it has fallen, it is really, really amazing. I mean, it is extremely overstretched. If you see, the price is somewhere here, the moving average is somewhere here. Some relief rally or some short covering should have been coming up in the last week, but somehow it has not come up. Will it be visible in the next week or not? It's very difficult to say, because the weekly RSI is heading towards 30. Daily RSI is already below 30. So if someone is a derivatives trader and holding negative positions on the downside, then continue trailing your stop losses aggressively. Same thing, same view I will continue for consumer durables. In fact, I have been speaking negative for consumer durables and consumption pack since weeks now, and they continue to fall. And the way they are falling, it is extremely high momentum sort of trade. So overall, sentiment, trend, momentum will continue to remain on the downside in both these sectors. And as a momentum trader, one should continue to trail their stops if anyone has initiated negative positions. Finance pack, the weekly chart is getting worse day by day. The prices are going down. The trend is down in the weekly. The RSI has also gone below 50. The daily time frame chart also looks pretty much weak because it's falling very, very fast. And overall sentiment, I think, is down. It has also broken this support, by the way. You can see this was support over here also. All these supports have been broken. So overall, it is a pretty much weak sector. Long only traders should avoid this sector. FMCG continues to remain weak, one of the weakest sectors recently. Only one thing to understand is that we do have a high wave candle over here, sort of a high wave candle, not exactly a high wave candle. So next week is going to be very, very interesting for FMCG pack, but overall sentiment, trend, momentum will continue to remain weak for the sector. IT pack continues to remain strong. Trend is up, the momentum is up. RSI is okay, or RSI is actually going sideways, but momentum is still holding on well. And this is consolidation, basically. Very difficult to make money. You can see the way RSI is also behaving. Very, very difficult, very choppy environment. Despite extreme high rally in the dollar, it's very difficult to trade here because recently there were also result season going on. If that was not there, then probably we could have taken some benefit in this sector. But I would just say that if this high is taken off at 39,215 or 20, then some positivity will be visible. Infra pack continues to remain weak. The trend is down. Next support could be at 8856. Momentum is also down. Again in the infra pack also, we can see lower low in our price and a higher low in RSI. So there are few sectors now which are showing signs that the downside momentum is waning, weakening. So I think next week is going to be very, very interesting. Trust me. Metal pack. Now metal pack is one sector where the trend is up. Momentum is also up the way prices have moved because momentum is always calculated from the price. RSI is although showing a lower high. So this is something which you need to be careful. If this low of the candle is taken off, if this particular low in the metal pack is taken off, then some negativity will be visible on the screen, 11,200 or 11,230. Then I think you need to be a little bit more careful. Pharma pack, negative, overall negative, trend is down, RSI is below 50, a little bit bounce back yesterday, but again today we saw a sell-off. So overall, I think it will continue to remain negative. All right. Now, this is something which was improving. PSE as a sector was improving. It tried really hard. Very fast rally. Dipped over here. You can see very fast rally. Dipped. Tried once more and then it's going down again. So I think now by the closing of this week, the weekly trend is also getting weaker. The momentum is also weak. So from a positive sector, now it is a choppy sector. Now again, I would like to avoid PSE if I want to go long. Realty is one of the sectors which has fallen very badly. I mean, the way it has fallen, one big red candle, it's like amazing. I mean, you have to be very careful if someone is holding negative positions because you can see where the moving average is at 827 and the price is at 756, 750. So need to be pretty careful, and trailing stop losses extremely aggressively is important. India defense, it's getting weaker and weaker day by day. Trend and momentum is down. Even the RSI is down, and even the daily time frame chart, it did display little bit of positivity in the last Wednesday and Thursday trading session, but today again we saw some sell-off happening. I mean, if you want to see, you will be able to see a little bit more carefully in the 2-hourly chart. You can see the way it has happened. This is a continuation pattern. So overall, India defense continues to remain negative. Midcaps also, see this, lower low in price, higher low in RSI. In the weekly time frame chart, near supports, broken it, but near supports, and overall sentiment trend momentum negative. Only thing is there is a higher low in RSI which will keep our hopes alive for the next few days. Overall, if you are a long only trader, it's not a right market to start nibbling stocks. Stay away, wait for more clarity and be very, very cautious. If you are a derivatives trader, know your sectors well and know your stocks well. All right, so trade less, trade wisely. One small thing before I stop the video, I mean, if someone thinks that the markets are bad, and especially if you're a new trader, if you think markets are bad and I should be avoiding the markets completely, well, I would say one thing, see, markets never remain positive all the time, neither they remain negative all the time. If someone is new to the markets, do not leave the markets. Achhe din aayenge. Good days will come back in the markets. When they will come back, we don't know. But leaving the market is not going to help you. You need to be continuously doing your homework, doing your research, and when the right time comes, you can jump in, because market is not going to call you and tell you, hey, I'm coming back and please ride on the boat. All right. So with this message, I will stop the video. Trade less and trade wisely. Thank you.